Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. Before we begin, I would like you guys to confirm me on the question section that the sound is in a proper level, because it seems like there is a slight delay in the software that I'm using, but if there will be issues, please let me know. Okay, so as we saw in the agenda, the first thing we're gonna do today will be to review this is the agenda, so we're going to review the questions that we've got. Okay, the first question that we see is, what is the recommended amount to trade NASDAQ? Okay, so what we're going to do is we will open here a notepad for the notes, and we will paste the question just like that. Okay, and what is the recommended amount to trade NASDAQ? So first of all, we're going to display NASDAQ instead of what we have here. So we can do that by clicking on the arrows here to fold it down, and then search NASDAQ in the indices. Going to click on indices, and if we scroll down, this might take time to load, so just be patient a little bit to load all the necessary data. And right here at the bottom, we're gonna find NASDAQ. Another nice way to find it, maybe more swiftly, is simply to erase whatever instrument we've got in here, type NASDAQ instead, and click it from the list, and then we have it with some levels already. Okay, we're gonna clean everything to start from scratch, so you guys will better understand what I'm doing through the process. We're going to click here, buy or sell, to enable the order entry, so we can always change it later, and we can see that the brighter blue is what is selected. So this is a little darker blue, this is what's not selected. If we're going to click on sell, this is now what is selected. And if hypothetically we think that NASDAQ is going down, our intention is that we want the value to decrease, and buy will be vice versa. Okay, so the question here is, what is the recommended amount? So to speak about the recommended amount, first of all, it's already at the default. As you can see, the lot size is 0.01. So if we're gonna place here one lot, this will be 100 indices. We can also go to here in instrument details, and in instrument details, we're gonna see that the lot size is 100. Therefore, by clicking on the order entry back, switching, okay, it's, as you can see, by default 0.01, we only get 1 unit. The way that it works is now 100% of a lot. This way is 10% of a lot, and this one is 1% of a lot, which is just one indice. Therefore, the value that is displayed in here is not really, as you can see, this is the value. It's equivalent to the value of the indice that we see here. And the reason is because we only have one. If we're going to increase to 10, we now see that the value was multiplied by 10. Full increase by 20 will be multiplied by 20. So from that, we understand that there is a value called price per indice. Okay, or maybe we'll call it price per unit, so later on you can correlate it to something else if you want. So price per unit will be $23,055 per unit per indice. And the next thing we're going to measure is obviously the number of units, which currently is just one. And then if we're going to go price per unit times number of units, number of units equals value. Again, for people who are using this interface, you don't need to do this by yourself, because the value is already written here, and the platform is multiplying it automatically. So we can switch, and it does everything by itself in terms of this calculation. Okay, for MT4 and MT5, this is basically the logic that's happening here. There is also another thing we need to consider, which is the leverage. What the leverage does is it multiplies buying and selling. With this in mind, when the leverage is 1 to 20, I now understand that the capability of this account with the leverage is 20 times more. I also need to consider that if I multiply it by 20, I can basically, instead of this current value, the value that we see, we can basically divide it by the multiplier. And then what we get is the necessary amount. If we go back to the instrument details, we will also see that at the bottom of the segment, we have margin percentage and next to it 5. How so? Because as we understood, we are multiplied by 20. So how much of the value do we need? 5%. 5%, this is the 5% we see here, the necessary margin. So what I'm going to do is I'm just going to divide. Again, it does it by itself on the website, but still we're going to do it since this is a webinar. 23,055 divided by 20, this is the number that we see in here. Okay, therefore value divided by leverage is giving us the margin impact, which is the necessary amount to open a position. Great, which in this case we saw that 23,055 divided by 20 is indeed the number that we've got, and that's great. How is this helping us with the question that So the question here is, what is the recommended amount to trade NASDAQ? So now we know that if we trade 1 unit of NASDAQ, as we can see in here, the necessary amount that we need is 1,152. Great. At the moment, I would like to know how much in percentage this will be out of my total margin. Okay, this way I can make a better decision about the whole necessary amount that I would like to work with. How can I do it? What I'm going to do is I'm going to take that value, margin impact, okay, or whatever other value that I would like to measure any percentage out of. So we're going to do it margin impact. We're going to divide it by the balance, and then we get a factor. Okay, and that factor can be multiplied by 100 to know the percentage out of the balance. Okay, in this case, if we're going to take 1,152 divided by 10,000, this is, okay, just a second. Okay, great. And what we have is 0.1152. And again, we're going to multiply that by 100. And then we get, what do we get? 1152. Great. This is for a single indice. This is for a single indice. And with this value, I can just do the multiplier. So let's suppose that I want to trade 0.05 in my strategy, or maybe 5 positions with the 0.01 that we saw. In this case, this needs to be multiplied by 5. Great. And now I know, oh, sorry, I think I've accidentally opened something else. Is this the same? Okay. And we're going to do 1152 times 5, and that gives us 57%. Excellent, 57% out of the available margin. So now I can make a better decision about the necessary amount. We can begin with, if my account would only have $1,000, would I be able to open the position even at the minimum value? The answer is no. The answer is no. As we can see in here, the necessary amount to open this position is $1,152. Therefore, depending on the strategy, and this is also the answer that I would like to write down, depending on the strategy that I am using, the number of positions that I am taking, and the size of each position, I can calculate in advance the approximate necessary amount. This way, I know, for instance, if I'm going to take let's say casually I'm trading a position once a week. Okay, so I need 1,152. If I open 2 positions, I need double than that. Keep in mind that the calculation that we're doing here is solely for NASDAQ. So for adding any other instrument like gold, or it doesn't really matter, anything else, we need to also accumulate it in our general calculation and be prepared with the necessary margin. I'm just going to go ahead and say that we always want to maintain the margin level at a healthy level, because if we can't comply to the necessary level and the margin level drops below the required, then the platform will close my position, okay, to free up margin, or I need to defibrillate more margin to keep the position open. Okay, so we're gonna write it down. Of course, there is no specific number that I can say now because the price keep on changing. And even if I'll write here 1,000 or 1,200 or whatever amount there is, it can be changed. So I'd rather put it like this. Now, the next question that we see is how can I automate my trading using pending orders? Okay, great. So as you can see, we can keep okay, let's pick something else so we can also diversify and show you different variety of instruments, maybe from the cryptos. And in just a second, I spoke about Bitcoin enough, maybe about Ethereum. Okay, we also have some levels in here, great. Okay, so at the moment, let's suppose we would like to automate our position. This way, we don't have to spend time on the chart and manually close it or open it. Great. How can this be done? We're going to click on the buy. Just hypothetically, again, we can always change it. And we can see that we are somehow in the middle of the, let's place some lines here for the resistance, another one here for the support. And we see that we are this. Okay, we'll also place here a trend line, and we can see that Ethereum moved quite considerably in the past few months. Just to establish the time frame we're looking at is weeks. We're going to also enable the crosshair. This way we get data from the candles, and we can see that Ethereum moved more than 100% from where it's been on April. And now with this in mind, I have a reason to believe that Ethereum will keep going up. So let's suppose that I would like to automate this position. I would like to automate the entry, the close, and the close with the profit and close with the loss. So I'm going to enable all of those boxes, execute when price hits, take profit and stop loss. And we're also going to write here that there are different types of orders. We have buy and sell at market price, and we have the other type of orders, which is pending orders. Now, pending orders are divided to 2 types as well. Orders that open the position and orders that that are closing the position. So on MT4 and MT5, the orders that are opening the positions could be sell stop, buy stop, sell limit, and buy and buy limit. Sorry, just a second. Okay, so we're gonna name that down, and in here it's not called buy or sell limit, it's called execute when price hits, which basically does the exact same thing. So it basically what it does is it opens the position when the price hits, and this is how it's called. Opening the position automatically when reaching the price. We also have take profit, which is closing the position automatically when reaching the price, but this one will be with a profit, and the other one will be with a loss. The position automatically with the price with a profit, and the other one will be with a loss. Again, the purpose, the main reason that I would like to use this kind of ticket of the pending orders is to save myself the trouble to sit on the chart and close it manually or opening it manually. So for instance, I don't want to buy it now because I feel that now we're quite in the middle of the consolidation. I want to buy it at the white line at 2165. 2165. We're going to click here, change it to white, and this will be our entry. Okay, and with this in mind, we'll also call it entry and paste it like here. Okay, and we also have another note for the take profit. We'll place it, I think, where we are, or maybe 1,000 higher. Let's see how far we are from here. This will be a little after the resistance, but still I can live with it. So 3,265 is a little higher. Let's stay with where we are. So we're gonna make it 500 higher from where we are. For this, we're gonna add 500 on top of the current value that we have. So the current price for Ethereum at the moment is 2,780. We're gonna add 500 to that. That's gonna be 3,280. We're gonna click and paste it here, or not, 3,280. And we're gonna do the same thing with our beautiful line here, 3,280. Great. As we can see, it's a little higher than the resistance, but I'm not in a rush, and I believe that it still has time to get to it. So I'm going to keep it as my take profit and also paint it in green. Okay, and for the stop loss, we're going to do the same thing. Maybe a little higher than the support, and maybe here. So 65 will be the entry, 2165. Similarly, we're going to add 500 to that instead of the current value. And we have 2665, which is even lower than the current price, 2665. 2665, great. And I believe that the okay, it's not exactly visible. Maybe like this is a bit better. Okay, and we're also going to subtract 500 from the entry for the stop loss. This way, we are going to have the stop loss 500 down as well. So that's going to be 1,665. 1,665. We'll have that in red. Great. Now we have, okay, well, let's add another note for the stop loss also. Stop loss. Okay, this one will drag up, this one will drag down, and we've got a very nice composition. We can also add a rectangle in here and define its boundaries the same way, 2665. Have it in green. Bottom will be the entry. You guys don't have to do any of the things that I'm doing at the moment. You don't have to, but I am mainly doing it to help emphasize the areas of profits and loss. This is why. Now we have the entry. We have the entry in red. We have the we have the entry in white. It's not letting us move it, and we have the take profit in green. Yeah. And we can see, let's also adjust the value to the value we wanted, and in here as well. Great. And we can see that at the moment we fully automated the entry, we automated the take profit and the stop loss. This way, this position will be open automatically and closed automatically without us doing anything. Keep in mind that if it doesn't get to the design price now, it's just not going to open the position. The condition here is to reach the price. Now, what happens For instance, if I did this sort of analysis now, but it didn't even go to that level. It didn't go to here. It went higher, and some things have changed, and now the market is in a completely different situation. In other words, what I'm asking is, can I cancel the, can I change my mind? The answer is, until this position will be triggered, we can define an expiry date to determine if the scenario in here, if it doesn't happen until in a week, let's suppose, I don't want it to happen. I don't want the position to be opened. So with this, we can cancel the entry, and then we basically can modify whatever we want. But if we don't do it and we keep it like this, even if it happens in a month, in 2 months, still it will trigger and it will work the same way that we have described. So this is a nice way to automate the trading, the position. And of course, by doing that, again, I'm not obligated to sit by the screen and close it and open it by those values. It will happen automatically. Keep in mind that it's not guaranteed, and there is slippage sometimes, and there are gaps. So this is something we can design, but the market is not something that we can control. So we're going to paste down the explanation we wrote in here. Execute when price hits. So those points, we're going to maybe paste it like this. I'm not sure that we really have the space for that, but I guess, yeah, somehow it looks a bit better. And again, as I said in the beginning, guys, the recording can be found in our YouTube channel. Super simple if you want to watch it again. Okay, so the following question is, how long should a trading session be? Okay. So a trading session, we're gonna maybe divide it to several steps. I think 5 is good for now. So the first thing we want to begin with in a trading session is, of course, the preparation. Okay, and what do I mean by preparations? Preparations is basically when we are, if I'll click here on the arrows and click here on the X, we're back on the default screen. And the way that I usually do the preparation is, first I want to know which instruments I'm going to analyze today and what is going to be the general strategy that I'm going to use. So how many positions and when to enter, and the same way that we design. So the preparation is basically, the preparation stage is choosing where the focus is going to be today. Okay, so this is one. After we have done with the preparations and we selected which instrument we want to analyze today, and also I want to know what kind of analysis I'm going to use in terms of indicators, in terms of news, and all this kind of things. So after the preparation, we have the selection. We have the selection. The selection is basically what types of assets and analysis I will use. Okay, so after I've done with the preparation and the selection, preparation also means I'm gonna place certain things on the chart to help me capture a certain area. So for instance, I can use an oval, I can use what you saw, the lines. I can also use Fibonacci retracement to maybe check the trend and vice versa. Okay, all those kind of things. This is something that I like to do before taking the position. Then, of course, after the preparation, after the selection, we also have the analysis part. So in the analysis part, we basically do analysis. We place those lines. We read the news. We can go to the economy calendar and see what is over there. So we're going to click on the economy calendar. We're going to read some things here to better understand how why the market is moving like that. Okay, great. We have other tools here, by the way, to help you with the analysis and other webinars as well. So the first is the preparation, then we've got the selection, then we've got the analysis, and then we've got also preparations. Okay, what does preparations means? As we saw in the beginning, what we did is we measured the necessary amount to trade the Nasdaq. But if I can do the same thing, maybe okay, maybe prioritization is a better word for that. And the reason is that I'm not obligated to trade whatever I'm analyzing. I can analyze, let me show you. I can analyze 4 different things, which 3 of them is the same, but we're gonna change it, don't worry. I can easily change it by clicking on the chart, of course. This one will be Bitcoin, be maybe Ethereum, we already saw. And in here we can place gold. Okay, so at the moment we're gonna wait a little bit for the data, or we can choose something else that won't take it too long to load. Maybe platinum, maybe a little bit of encouragement like this. Okay, go back to 1, opening again. You gotta be patient for the data to load. Great. And now, as I was saying, as part of the answer to this question, how long should a trading session be? I'm not obligated to trade everything that I'm analyzing. I can analyze and I can decide later if it's good for me or not. And I can also decide how much margin I'm going to use, right? So in the preparations, I do the preparation. Selection is what instrument I'm going to use, and also what type of analysis. Then we've got the practical part. We're actually analyzing and doing what's needed before opening the position. And then lastly, we have prioritization, when we can line down all the instruments that we choose. We've done the analysis, and now we choose which one we will open the position with. Okay, and after that stage, of course, we can basically trade. Okay, so all those steps can be divided according to the available time that you have. Now, if I would need to sum that into a time frame, we can maybe have a range of, let's say, 1 to 3 hours. I would call it an average time frame for a session to be, but it's not, anything official. Okay, I can sit more than that, I can sit less than that. That also depends on the trading style, if I'm scalping or intraday or whatever else I'm doing. So at the moment, this is what we have. So 1 to 3 hours, and I would probably split it according to the steps we wrote down. So if we take those 1 to 3 hours, let's at the moment work with 3 hours. I would split that to maybe just a second. This one will be 30 minutes. Of course, everyone can do, as I said, whatever they want, and depending on their available time. So we've got covered 1 hour. Now we've got 1 hour for the analysis. Prioritization doesn't take too long. I would say 30 minutes at max. And lastly, 30 minutes to trade. Now, I know it might seem funny for the last part, the so-called the most important part to trade will be 30 minutes, but at the end of the day, I can trade for 5 hours and do all of those. I don't have to. Sometimes if I don't want to go through all of this process, I can just use the signal. I go like this to the signal section, and I click in here on gold, view signal, and I expand the chart, and I click in here buy, and I'm good to go with the signal. That didn't take me 5 hours, 3 hours. That took me 30 seconds. But keep in mind that you're not always going to be using the signals does not mean that I don't need to do those steps. Using the signals means that I get some kind of analysis like in here with support and resistance, but it's not guaranteed. So those steps are there are here to help me optimize my trading. I can choose how much time to spend. I can also choose what levels of analysis and I want to use. But at the end of the day, it all comes to the point when we want to make profits on the position. Okay, so just be open-minded about that. Okay, I'm gonna write here. We can spend the time dynamically depending on the progress we make in each step. We can choose how much time to spend in every step. Of course, we don't have to capture that. We can just, begin and see how it goes. But I find it useful to summarize to a certain duration. This way I know that I'm going to be focused and I know that I can handle it. It's not too long for me. It's not too short for me. This way I know that it fits just as I needed. So we wrote we can spend the time dynamically depending on the progress we make in each step, and we can choose how much time to spend in every step. I don't think we need to write also depending. I can choose the time frame for each step depending on my available time and schedule. Yeah, of course, we're also going to take that and somehow place it in the presentation. Although, yeah, at this point, it's getting really, really tricky, but I hope. Just a second, guys. You'll have to give me a moment. Maybe now. Very, very close. Very, very close. What we can do is we can maybe get it higher, like this. I wanted to display it as a list, but it's not really crucial at the moment. Yeah. Okay. Well, let's carry on with the last question. Unfortunately, I have no available space at this point. And the last question in here is it recommended to study in an official education institution? I think what we're missing here is trading. Is it? Because obviously the question here today is not if you want to do it, if it's not related to trading. I'm not a consultant or anything like that, but I would speak about it a little bit just to explain what I think. So if it's recommended, obviously, if I'm studying it officially in any official institution, I'll have more information and I'll have more knowledge. Again, it depends which course I'm taking, but generally about the market. Okay, so it's likely that thanks to that, I'll understand a bit better how the economy works. So I can maybe write here studying economics and trading finance can maybe contribute better understanding of the general of the market. Okay, it's not that if I'm going to have a degree in finance or economics or anything like that, I will be able to predict the market 100%. That's absolutely not how it works. But it will give me some necessary inputs to know the economic changes. For instance, if I'll go here to the economic calendar, there are lots of decisions in here, governmental decisions and interest rate decisions, as you can see, and all kind of factors that affects the market drastically, which is called fundamental analysis. So a normal, a regular person that I take without any previous experience, not in trading, not in economics, not in finance, not in anything, probably this list of things is not going to say a lot. Okay, we can click it and we can understand a bit better what it means. But studying it in an official institution and understanding the economic relation between several things can assist with analyzing those kind of reports. This way, when I see a report, if I trade currencies or something like that, I can basically understand the reason of why it's moving. Similarly, what happened with Trump? What happened with the tariffs? What happened with the war, right? We had the war in the Middle East, so this had drastic economic changes. COVID, all those things are accumulated eventually to the economy, and there are different changes like the interest rate and inflation and all this kind of things, and studying it can really improve those inputs. It does not mean that we don't need to practice and learn it by ourselves through to practice and trade by ourselves. So the final conclusion to answer this question is studying economics and finance can contribute, to my personal opinion, better understanding of the market. It's not necessarily going to give you practical tools which you can right away dive and trade like a professional trader. I think you still need a lot of practice before using those tools in the market, but it can. I don't think that it can hurt you in any way. Okay, again, if you have the funds, if you have the free time, and that's kind of a case that I'm talking about. Okay, so studying economics. You know what? Let me add just one more thing here, just for the sake of the discussion. We have to delete something in here. I'm gonna delete this part. Okay, studying economics can contribute a better understanding of the market, but does not replace practical studying. The business, as I said, the practice does not replace, does not mean the need to practice and learn how to trade, basically. Okay, so to conclude what we had so far, I believe we've covered the questions quite successfully, but still we're gonna say a few words. The first question was, what is the recommended amount? We wrote that depending on the strategy that I'm using, the number of positions that I'm taking, and the size of each position, I can calculate in advance the approximate necessary amount, which is called the margin impact, as we saw in the first question. The second question was how to automate. So we've learned there are 3 automated pending orders which we can design. The execute when price hits, take profit, and stop loss. Then we saw the third question was how long should a trading session be, which we divided to different segments, and we saw that we could put more time into the topics that we find more useful, and depending on the progress that we make, we can skip ahead to the next step. And now the question that we answered is it recommended to study in an official education institution? And as I answered, studying economics and trading finance can contribute better understanding of the market, but does not replace the need to practice and learn how to trade. Okay, so this is basically what we have today. We're gonna also share with you some links here. As we said, the links here, which are shortcuts to the functions we have on the website. But I'm also going to show you how to get to those things from the website with just without leaving it. So the first link I'm sharing with you now will be the Education Center for obviously more education. The second link is the FAQ and the Help Center. The third link is Real Account if you're still practicing on a demo and you want to get down to business. And lastly, the link here with the Academy that basically takes you to the Academy. Although I'm going to show you now how to get there from the website. One more thing that I'm going to give you today, guys, will be this special promotion code, the Q&A benefit. This is something you can give to your senior account manager and receive one-on-one premium market review, which to my opinion, if we spoke about studying in an official institution, this is the most practical thing that I can give you today, one-on-one premium market review with a senior account manager live, and that's just great. Also, I'm going to show you how to get to the Academy from the website. We're going to click on the AvaTrade icon to get to the default screen. Click here on the arrows to fold it down. And right here at the bottom, as you can see, we've got the chat. Above that, we've got this YouTube icon, this play icon here. If we click on tutorials, it's gonna, if we click first on Academy, it's gonna take us to the Academy. And if we click on tutorials, it's gonna open right here on the website, the tutorials for us to enjoy. As you can see, there are various topics in here, the platform review, underneath the trading basics, the stock market fundamentals, and the Forex basics as well. All kind of different things here for you guys to enjoy. And you just need to click on a button, not doing anything special, just like that, and you get the videos. So there is no excuse not to practice. All right, unfortunately, guys, for today, our time is up. If there are any questions, I'm happy to answer. You can fire away. Any questions about anything that I said so far, guys? Great. In this case, I wish you all have a fruitful week. As I said in the beginning, the recording will be uploaded to our YouTube channel for you guys to watch. And there is a lot of useful content on our YouTube channel as well. Until then, I wish you all best of luck with trading. Have a fruitful week. Come join us next time and have a good day.